Why? If you're trying to do, yeah, like
You're struggling to come up with words for this one. Welcome back to Poutine Politics, Canadian issues served with cheese curds. My name's Adam.
My name's Mike.
So, before we get started, I wanted to add a few words. It's almost like feedback. Not quite feedback, I guess. Or follow-up.
Man,
not quite follow-up.
I want follow-up.
Well,
would be fun.
I feel like we're not there yet because we don't have enough people commenting on stuff.
I know.
We have people listening, and that's kind of what this is about. Step one, we have people listening, and I want to thank those people who have been listening. I want to thank those people that have been consistently listening. I want to thank those 11 people that probably work for Google that listened to our gas prices episode. That was kind of one of the funniest things. I go on SoundCloud, and it's like, there were 11 listens from Mountain View, California. Well, what's in Mountain View, California? Oh, Google headquarters. So I want to thank those people. Something tells me they're not listening anymore because Mountain View, California has not shown up since that episode.
Sounds about right.
So
it's okay. We'll take it.
That's
Thanks,
right.
guys.
Thanks, everybody. And we got our first bit of fan mail.
What?
Fan email. Not like in the mail. Nobody sent us a postcard. Yeah, somebody sent me an email saying that they really enjoyed our episode on the conservative climate change plan. So thank you for your email.
Awesome.
Feedback. Since we haven't said anything like that yet in an episode, I figured I wanted to start and say thank you to the people that have been listening. Tell friends, tell family, get them to listen.
Yes,
maybe they'll enjoy it too.
What is it? Like, listen, subscribe, 5-star rating on iTunes.
Smash that bell icon to get notifications of new episodes. Whatever.
Tell your friends. Tell your friends. How else am I supposed to shamelessly plug this?
We're on Patreon.
We're on Patreon.
That's the real shameless plug because that's where money's involved.
Yes.
I have some plans for Patreon to actually maybe make it worthwhile for people to be patrons. I'm thinking about something. I don't know if Mike's going to like it, so I have to bring it up to him first, but I'm thinking about stuff.
That's fine. He's got golden light for me. How do we spell Patreon again?
patreon.com/Poutine Politics. Getting that out of the way. Thank you very much, everybody. So the topic that I wanted to talk about was recently, I think about a week or so ago, on one of the Facebook groups I'm in, there was someone that posted. It's not a political platform because it's not from a political party, but it is from a think tank called Canadians for Tax Fairness. And so it is their platform for tax fairness. And it's recommendations, I guess, that they have for government. It's like, this is the kinds of things that the government should do in order to fund some of the programs that they've been talking about. So, for instance, the NDP and now the Liberals have been talking about universal pharmacare. So we have universal health care, so expanding that to pharmacare. Affordable childcare services, whether not necessarily... Well, I guess that affordable childcare would involve potentially subsidized childcare, much like they have in Quebec right now, but expanding that to the entire country. These programs cost money, and these are things that the political parties are talking about. And so right now, at least based on our tax structure, it's how are we going to pay for all of that stuff?
So what you're saying is that this is a group of people that are knowledgeable enough in the situation that they can come up with a plan of action that makes sense and that could potentially work and not harm the economy. Is that what I'm trying to... Is that kind of the idea?
Pretty much.
Yes.
Pretty much. I have to admit, a lot of their thoughts have to do with increasing tax rates, okay? But very specific targets. I'm not going to go over their entire document because that's going to take too long, but there's certain key points that I want to go over. You can find this policy document on taxfairness.ca. So the first part that I do want to mention is the fact that government revenues have been dropping since around 2008. Shouldn't be surprised. The timing of it, 2007, 2008 is when the 2 points were cut off of the GST, and then 2008 obviously was the worldwide financial crisis. Government revenues have not recovered since then, but we're still in pretty sizable deficits because of program spending, because of stuff that the Conservatives and then the Liberals have wanted to introduce or wanted to expand, and we're paying more money for this stuff, and we're going further into debt in order to do that. This is why I've always felt the issue that we have is a revenue problem. We have a revenue problem as individuals, and we have a revenue problem as government. I hear from people where they say, oh, well, we already get taxed to death, and we really don't in the sense that tax rates are pretty much at historical lows. The problem is more so that as individuals, our wages are not keeping up with inflation.
No, and there is a certain amount of people think that the money they're gaining isn't as much as they want to have. And it's because, unfortunately, to burst some people's bubbles, we have more disposable economic ability than we ever have. Basically, I can buy things now that my parents never could afford. Like, I have the ability to put a library in my pocket and my cell phone. I have the ability to get a 50-inch TV, whereas my parents never could. Those kind of things my parents never had. Now, some other larger scale things like housing and things like that, that's something that my parents could afford more easily, and now something that I may not be able to. Keep in mind, I do own my own home. However, I'm saying as general population.
Right, and you've owned your home now for 15 years?
Yeah.
Yeah, so I mean, there's been a large enough difference even just in 15 years that, yeah, I mean, housing is nowhere near as affordable as it was back in, say, the 70s and 80s when our parents were buying their first homes and things like that. But you're right. It's kind of economies of scale in the sense that stuff that's more on the low end is more affordable now than it was when our parents were coming up, when our parents were our age.
Yes.
Okay. So their idea is essentially that tax policy should work to reduce inequality. Whether that has to do with eliminating government subsidies, whether that has to do with tax increases on businesses, tax increases on the wealthy. The idea is that, we should be trying to bring the people in the, quote unquote, lower rungs of society up.
Yes. Because a business will not spend more money unless you force it. A person will not spend more money unless you incentivize them to it. I'm not saying that people don't misspend their money. However, that's just the way it works. You have to make people want to do something. You have to either force them to do it heavily incentivize them to do it or force them to do it.
Yeah.
But they're not going to do it on the willing.
Right. And I mean, yeah, absolutely. People do misspend their money. Okay. Like for myself, I'm a non-smoker. I am a non-drinker. I look at people that buy 2 packs of cigarettes a day or look at people that buy alcohol every single day or 3 to 4 times a week and think you're throwing that money away. But that's not their viewpoint on it. Whether it's an addiction thing, whether it's a social thing, whether it's a stress thing, whatever. I mean, that's what they're choosing to do with their money. It's not up to me to look down on them and say that's a bad choice. For me, where I probably waste money is, we go to the grocery store and we buy a bunch of food, but then we probably eat out more than we should. And then as a result, some of the food that we have at home goes bad.
That's right.
Right? So, I mean, everybody does something that they probably shouldn't do with money. That still doesn't mean that the average person is rich. The average person is still struggling to get by, and it's more to do with a lack of revenue as opposed to an overabundance of taxes. Again, most of this stuff is going to affect corporations and wealthy. So some of the stuff, like there's a section there where they're talking about closing regressive tax loopholes, which this group, the Canadians for Tax Fairness, figures would save roughly $16 billion plus a year, or generate $16 plus billion a year in additional government revenues. So things they talk about is eliminating stock option deductions, eliminating lower taxes on capital gains. So I'm going to touch a little bit more on this one. So eliminating lower taxes on capital gains. So right now, if you have stocks or if you have a second home or a cottage or something like that, and you sell it at a profit, you're only taxed on half of the profit.
Mm-hmm.
Now, the tax rate you pay on it is based on whatever marginal tax rate you're in, but you only pay tax on half of the profit. So the problem is, let's say for someone who is extremely wealthy that owns a second home that sells it and makes $2 million profit, they only have to declare $1 million as income and pay the taxes on the $1 million. Now, the taxes on that $1 million might still be 50%, but that 50% tax on that capital gain has a lot less effect on someone who's that wealthy as opposed to, somebody that maybe let's say they inherited a cottage or they bought a rental property and they owned it for 10 years or something like that. And then it increased in value by $100,000 and they sell it $50,000 worth of income and they got to pay $20,000 in taxes. $20,000 in taxes to someone who made $100,000 profit on a house is more of an effect than Someone who makes $2 million on a house and pays $500,000 in taxes.
Are they trying to reduce the amount that they have to pay, or are they trying to get rid of it altogether?
They're trying. So the viewpoint is that rather than capital gains being taxed at 50% of the profit, that you claim the full amount.
Yeah, because that makes sense. Because it's one of the ways. So whenever people say, well, the wealthy are finding tax loopholes, that's an effective strategy to find tax loopholes. And there's many more.
Yeah. Predominantly the people that are claiming capital gains as income anyways are people that have the money to, they're in the stock market or whatever. They're buying and selling businesses, buying and selling stocks. It's again, your kind of average person at the median income level in Canada is not earning this kind of income. And so a change like this is not going to affect the average Canadian. It's predominantly going to affect the people that make the most money.
Yes. They're the ones that are using those tax loopholes to hide the income that they're getting, to gain more income into their pocket, so to speak.
Right. Their numbers on this point about changing the inclusion rate on capital gains to 100%, so having to claim 100% of the profit, they figured that it would generate over $13 billion a year in additional tax revenue. That's pretty close to what the deficit is right now, just to put it into context. Eliminating business meals and entertainment deductions. So this has, the joke about, Toronto Maple Leafs tickets is all the people that are sitting in like the platinum seats are the suits from, Bay Street and other big businesses down in Toronto, and they miss half the game because they're not actually there to watch the game. But the businesses that are buying those tickets and buying the season tickets, they're using that as a write-off.
Yeah.
And now the write-off is only 50%, unless technically the loophole there is that they could claim them as an advertising expense if they're buying the tickets specifically to give them away to clients or to business partners or something like that. I mean, that's a loophole that they're not really supposed to use, but theoretically they can.
Yeah. Anytime that you have loopholes like that, and that's why you hear people saying, we have a promotion for this and we're giving away tickets. It's not because they are trying to be generous with their tickets. They're your business trying to expose loopholes and trying to gain advertising, and why not? I have no problems with businesses taking advantage of situations like this. I don't expect a business or an entity like a business to not do that. Let's close those loopholes because they're the ones that they're not truly paying for what they should pay. And that's a problem.
And the example that they give in regards to why they feel like being able to write off meals and entertainment should be eliminated has a lot to do with, now what's recently come in the news again, which is the whole SNC Lavalin situation, because, their charges has to do with what's classified as bribery. And part of that is, paying for meals and entertainment and other things of that nature for foreign individuals, business partners. And so a lot of those expenses that SNC Lavalin occurred that it now turns out could be construed as bribery, they would have been allowed to write off.
Yeah, because they're business expenses.
And then pay less taxes as a result.
Right. When you write something off, you're paying less to the government, right? Like, yes, you still have to fork it out, but if you can pay less as a result, it's often in your benefit.
Yeah.
That's why they have accountants. That's why they have people like Adam that are very good at figuring out ways to lower people's taxes. And that's what you should do. If you're an accountant, you should try and lower your taxes for the people that are involved.
Right. My point of view with my job is I do want my clients to pay the least amount of tax possible. Absolutely. That is my job, is to either have people pay the least amount possible, or, if they have to pay more, that it's part of a strategy that in the long run they'll pay less, right? But I realize at the same time that tax rates as a whole are too low. And by changing them, increasing them, is it going to affect the clients that I deal with, which are predominantly small businesses? Yeah, but it's not going to affect them, or shouldn't affect them as much as large businesses. Okay, so this one was on there. I didn't necessarily agree with it, but on the same time, I understand why they had it there. So capping the tax-free savings account lifetime limit to $65,000.
The tax-free savings account is good for... It was made so that way people could use it at lower income. The reality, though, is that people of the lower income bracket generally speaking, don't have the financial means to then invest in that.
Yep.
The people that are using it aren't lower incomes. They're just, it's another tax haven for people that in the higher income brackets.
Right. Not generally. Like I remember when the tax-free savings account came out. We had some extra money that year, and so I put in the $5,000 and I invested it. And about 6 months later, I had to take it out, and then I didn't recontribute to it for a long time. And I'm not low income. Okay. I've really only started using my tax-free savings account again this year. We are finally in a position, and I'm 35. We're finally in a position that I feel like I can use it and leave the money there. Meanwhile, everybody that at least was age 18 in 2009 can contribute $63,500. The majority of the people that are maxing that out are not low income because they don't make enough to be able to max out those contributions. If you have a couple that between the two of them is making minimum wage, so they're making, I don't know, let's say $40,000 a year between the two of them, those people are not going to make enough money to be able to put money into their tax-free savings account. I mean, again, discretionary spending and things like that, maybe they could find an extra $5 a week if they're lucky. But most people can't that are that low income.
No. And that's the thing, the tricky part. And to clarify, in case somebody listening doesn't understand the difference between tax-free savings account and RSP, RSP uses pre-tax dollars to grow, and you don't have to pay for that growth. Tax-free savings account uses post-tax dollars to save and allows that to grow. That's basically the big difference. And I remember back in my financial advisors days, I actually did the calculation on it. It's probably not the same right now, but it's roughly $36,000 a year. That if you made more than $36,000 a year, you're better off for long-term savings to put in an RSP. If you made less than $36,000, you're better off to put in a tax-free savings account just by the numbers.
Mm-hmm. And that was probably based on tax brackets at the time.
Yeah, it was based on tax brackets at the time. I mean, it might fluctuate, but it's in that range, 35 to 40,000, we'll say.
Yeah,
probably around that range. So the reality is that only applies if you have that savings. Well, if you don't have that money lying around, which most people in that tax brackets wouldn't, or lower than 35,000 wouldn't have, then the only people it applies to are people that have maxed out every other possible savings plans, like maxed out their RSP. If you max out your RSP, yes, you should then go to the tax-free savings account. But those aren't the people that they claimed it was for.
No, exactly. I don't even max out my RSP. I'd love to, but I don't. I can't. Not yet.
No.
I have a thing called a mortgage. And you still pay a mortgage probably too, right?
I certainly do.
There you go. Okay, so the next section was making our system more progressive. So they figured that this would generate as well somewhere around $16 billion plus a year. So restoring corporate tax rates to 2010 levels. So this is federal tax rates. So right now, the general corporate tax rate federally is 15%, and for small businesses, it's 9%. So their proposal is to raise the general rate back to 18% and the small business rate back to 11%. So we got a 3% increase on general rate, which is, large businesses that make over $500,000 in profit, and 2% on small businesses, so under $500,000 in profit. That's kind of the delineation line when it comes to corporations. So they figured that those two changes alone would generate almost $8 billion a year in additional revenue.
Yes. And, some people say, oh, well, it's going to harm small businesses. It's going to make them bankrupt. Like most things, the companies that are marginal are the ones that are going to be affected the most. Businesses still have to run, still have to operate. So, yes, it does come at some kind of economic expense. However, you have to pay some way. So you either pay for it from the person's pocket or you pay for the business pocket. It is what it is.
Yeah. Okay, so the Liberals introduced a new federal tax bracket of 33% on incomes above $200,000. That was introduced in 2016. In this report, they proposed creating another tax bracket of 37% for incomes above $1 million.
Interesting.
Based on, I guess, public numbers that are available, that tax rate would roughly affect only 25,000 people in the country. But based on their average incomes, would still be able to generate roughly $1 billion in tax money every year. So $1 billion in extra taxes from 25,000 people out of a country of 35 million.
Those 25,000 wouldn't like it. And the other problem is that those are the 25,000 that have the most influence.
Probably. Like the Desmarais and the Westons and families like that.
No, because they're not income. That's the other thing. A lot of those people don't get the income, and that's the tricky part that never gets addressed.
What do you mean?
I mean that like a lot of people, if you inherit money, you're not paying a lot of income.
Oh, yeah, okay, yes, right.
You just have the money.
You have the money.
That's not income, though.
Right. You're paying the taxes on the money you're making on that money.
Yeah,
But-
which is nowhere near the amount that it is for direct income.
Yeah. Apply GST, HST to digital services. So what they're saying is let's say a company like Facebook. So Facebook's an international company, but they offer advertising services to Canadians. You know, like for this podcast, we could pay for advertising on Facebook to get our posts out there. I've heard that it is hit or miss as to whether it's successful or not, but it's something you can do. So as it is, because Facebook, at least from a business standpoint, even though they have offices in Silicon Valley, they are actually headquartered for tax purposes in Ireland. If you pay Facebook with a credit card for advertising, if you look at that credit card statement afterwards, most likely it's going to show that the charge came from Ireland. But it's going to be in Canadian dollars.
Yes, but it goes to Ireland.
It goes to Ireland. And that's because Ireland has an extremely low corporate tax rate. So, but the thing is that because they're a foreign company, they don't have to charge you sales tax. What they're proposing is that companies of that nature that are from outside, that are providing services to Canadians, which technically, because you're accessing it from your computer, could be argued that the services are being provided in Canada, that they should have to charge our sales taxes on that. Obviously, the argument against that would be, well, then that's more money out of the pockets of the person that's spending the money. What I would say to that is if they're a business owner and they're having to pay HST, they can claim that HST that they're paying as an input tax credit on their HST return, and they're going to essentially either A, get that money back, or B, have to send less of the HST they've collected from their customers to the government. So in the end result, it really is or should be relatively revenue neutral to the person that has to pay it.
Yeah, it could be interesting. I mean, I'm surprised it's not in place yet, if I'm going to be honest. Like the fact that the government hasn't been like, wait, we're sending money somewhere else and we're not taxing that? Yeah, we should be taxing that. Let's tax that.
Absolutely, we should tax it. Limit corporate compensation deduction for a single executive or employee to $1 million. So everybody remembers Doug Ford's whole situation with Mayo Schmidt, with the CEO of Hydro One, calling him the $6 million man.
Yep.
Okay. And then I guess when they turned around and were trying to hire a new CEO executive for Hydro One, they set the salary at $1.8 million. So significantly less, fine, which obviously was part of the point of making the change. But so what this is that when you consider how much, especially CEOs tend to make between their wages, between their incentive bonuses, between stock options, and all these other things, all these things that are write-offs to the businesses that they work for. This proposal is to limit the write-off to the corporation per employee to $1 million.
Yeah, so it's a way of closing funds to people, and if you want to pay somebody $5 million a year, pay them $5 million a year. Don't pay them $2 million a year, and now you get a car, you get a house, you get a 3% stock options, and all this stuff, because if you're not claiming it, again, there's a capital tax gains. Those are all these other loopholes that then expose that aren't contributing.
What I found out in reading this document, which was news to me because I don't pay very much attention to laws that get passed in the U.S. A lot of people should know about the tax cuts that were passed in the States in 2017. Everybody's been calling them the Republican or Trump tax cuts and huge corporate tax rate drop. But apparently one of the things that was included in that bill was this provision, where the write-off for businesses for compensation would be limited to $1 million. So any pay to an executive, to any employee that was higher than $1 million, any sort of compensation higher than $1 million, the business would only be able to write off $1 million of it.
That's right. People understand. Even though Trump is crazy, he occasionally does the right thing. I know it sounds surprising.
I would argue that it wasn't him that did that, though.
Shh, he's not.
It was someone else that came up with that rule.
It was the best tax plan.
100%.
100% is the best tax plan.
Reintroducing inheritance taxes on high wealth estates. So this goes to the point you were talking about earlier. So there used to be an inheritance tax, but when capital gains as income was introduced in 1972, the inheritance tax was eliminated. So in certain provinces, there is what's called a probate tax. So when someone passes away, it's a very small tax that has to be paid on the net worth of the assets of the estate, which in Ontario works out to like 1.5%. So their recommendation is that it should go back to roughly what it was pre-1972, which is 45%. Now, what they do say is 45% on estates over $5 million.
Yeah. And a lot of rich people don't like this idea because it's like, well, I'm giving my wealth to my kids. My argument towards that is they didn't make the money. You made the money. If you want to give the money to your kids, teach them to make money, and that's fine. However, if you're just giving them the money, they didn't earn it.
Whack 'em.
Well, I mean,
that's kind of what it is, right?
Like, we're not talking about, if you leave your kids $2 million.
Mm-hmm. Yeah, like let's say if I pass away and the only asset I have is my house, and my house is worth $500,000. That's going to get hit with the probate fees, like the provincial probate fees, which, like I said, in Ontario is around 1.5%. But that's a low enough value that it would not get hit by this proposal because it's not $5 million. Okay. Obviously, the majority of people that pass away do not have $5 million estates.
No.
So we're talking about a small percentage of the population, predominantly the wealthy, as would be classified as the 1%, and what I would technically probably classify as higher than the 1%, tackling international tax evasion, avoidance, and tax havens.
Man, do I want to go after that one.
Okay, so reforms on the international corporate tax system. So part of the issues that happen right now, and this goes back to where I was talking about the fact that when you pay for advertising on Facebook, you're most likely going to see that the charge goes to Ireland. So Facebook's headquarters are in Silicon Valley, which is in California. So shouldn't they be paying U.S. taxes? Shouldn't they be paying California taxes? That would make sense. Companies shovel money around to subsidiaries in other countries, which are essentially tax havens because they have little to no income tax. So Ireland has been popular up until, I believe, last year, and businesses are going to slowly change as a result, because the corporate tax rate in Ireland was around 1%. So if a company like Facebook makes a profit of, I don't know, let's say $10 billion from its worldwide operations, they are able to shift the profit to this subsidiary in Ireland and pay 1% tax to Ireland. Never mind the fact that they've generated that money in countries worldwide. All of those other countries that they're doing business in and making that revenue from are not receiving a penny.
That's why the big thing about the Panama Papers and the super rich, and we're talking about super rich, like the wealthiest of the wealthy, those people feel like taxes are governments robbing them for money.
Right.
That's their mindset. They feel like we are so wealthy, we're almost have the same amount of money as some governments do. Why should we paying them money when we feel like we're doing a better job? And that's how they feel. And I get the mindset of it. The reality is as though that as much as you want to think that you're doing a better job, we don't have power over you directly. Like, I can't tell you based on my voting, you should make a policy change. You shouldn't put your money into that particular social program.
Mm-hmm.
I can vote and make a decision with the government. And that's the difference. Am I saying the governments do a better job than some of the super rich? No, they don't. Not even close.
I'd say it's the interests of who they're trying to help, though. I would say predominantly the governments at least are trying to help the average person, whereas the wealthy are trying to help themselves.
Oh, very much so. Like it's yes, they will do that. It's some of them are only doing it because they know it's a tax write-off. And regardless, even though I agree that Bill, and I don't mean to pick on Bill Gates because I think he's an amazing man from a financial philanthropist standpoint and wish more people were like him, I still can't make a decision about where he spends his money. I can't influence him in any way.
Right.
I can't force him in any way to make sure he spends money a certain way.
Yeah.
And that's the difference.
Whereas your vote technically could work towards that, or obviously multiple votes can work towards that by changing government.
That's right.
Right. Okay. So apportioning profits from multinational enterprises to countries. So the idea here is either creating or expanding on the current kind of international tax policies that exist. Like right now, if a company operates in Canada, it files a tax return based on its jurisdiction. For most jurisdictions, if you're a corporation, you file one corporate tax return, you pay your federal taxes, you pay your provincial taxes. The federal government gives the provincial taxes to the province as part of how money changes hands, and it's very simple. This international tax policy is, instead of where Facebook can take all of their revenue and throw it into their subsidiary in Ireland and pay 1%. It's almost like an additional set of tax documents that they're responsible for filing every year, whether this is with the IMF or the World Bank or whatever sort of international, organization that's going to handle this kind of thing. But they have to report where the revenues were earned, pay the taxes based on where the revenues earned, and the money goes to those countries.
Yes. Because tax havens and loopholes like that, creating dummy companies or companies that aren't where they say they are, essentially.
Right. And apparently they're in the EU. I don't think they're all the way there, but this is something that they're doing because the EU, it's one big, obviously, conglomerate of nations, but every nation has their own tax policy and has their own tax rates. And so businesses that operate within the EU are having to pay their taxes, proportional to the revenues or the profits that they're making in, each country within the EU. So they're already doing that. So it's kind of taking that policy and expanding it worldwide. Ending double non-taxation agreements. So this is another one of these issues with the tax havens, is that within tax treaties between countries, the problem is that, again, a company like Facebook can send all of its money to Ireland, pay the taxes in Ireland, and then when they move the money back to, say, the parent company in the United States to pay for expenses or whatever, do what they need to do to generate more revenue, they're not getting taxed on bringing the money back to the States. So they're still always only paying taxes at whatever that low rate is in whatever tax haven they're sending the money to. Apparently, Canadian corporations alone hold over $200 billion in assets in tax havens, and individuals have even more than that. And so the problem is that, like I said, they can send this money to somewhere that they can pay essentially no taxes, pay the next to no taxes on it, and then bring the money back to Canada and still pay no taxes on it.
And everyone knows about it. That's the thing I don't understand. Everyone knows that these tax havens exist, and we're not giving the CRA the resources to combat it. Some reports I've seen, I don't know about that one individual says it, but like we can wipe out our deficit if they go after tax havens like they want to.
Yeah. I feel like there's some politicians that probably benefit from tax havens, and that's why, even though there were some eliminations of tax loopholes under the Liberal government in the last couple of years, they haven't gone far enough. And I feel like maybe it's because it would catch some of their members in that net.
Yeah, for sure. Some of those people listed in the Panama Papers were politicians.
Yeah. Of all stripes. Politicians of all stripes.
Oh, yeah.
So yeah. So I mean, none of them really wanted. None of them want to close more loopholes than they have to. Improving corporate transparency. So publishing taxes paid by large corporations with revenues over $100 million.
Ooh.
They already do that in Australia, apparently.
Ooh.
Let's say Enbridge. Enbridge makes revenues of over $100 million for sure. So I don't know if they participate in this practice of shifting profits overseas, but what they suggest is a public list of companies that make over $100 million in revenue, and it show how much tax they're paying, so that you can see what percentage of their revenue, of their profit, whatever, that they're actually paying in taxes, and whether it appears that they're paying their fair amount of tax.
Yeah, that would be kind of interesting, because then you could see companies that are like, oh, if you increase the minimum wage, it's going to cost us this much money. Really? And you made how much revenue last year?
Yeah. So then to add on to this, in regards to multinational enterprises. So making their country by country reports. So where I was mentioning earlier about companies should have to pay taxes based on the jurisdiction that they're earning the revenue in. So apparently governments already receive reports from multinational enterprises to say what they're making in their country. And so the note that was in this report, the government receives financial reports from multinational enterprises with over 750 million euros of total revenue. So euros, let's convert it to Canadian dollars. So we'll say that's roughly $1.2 billion right now. But they're given to the government, and that's as far as it goes. So again, kind of along the lines of publishing taxes paid by large corporations, publish this list, make it public.
Yeah, and then policymakers don't have the ability to hide behind them. You can't say, oh, the handshake that they gave us behind us saying, oh, well, we didn't make that much money. Now all of a sudden you can say, yeah, they did. Why aren't you going after them? Mm-hmm. Public knowledge is huge.
Yeah. Combating climate change and supporting sustainable development. So their recommendation is to strengthen the carbon tax and eliminate preferences for large emitters. So like we talked about in our conservative climate change plan episode, right now, the rules when it comes to paying a carbon tax for large emitters is when they emit over 50 kilotons of CO2 equivalent per year. They're saying eliminate that. Large emitters should have to pay the carbon tax right from the get-go. I'm very okay with that.
Yeah, carbon taxes, it's one of those things where you can get lost in the weeds. Whatever, and I'm not an economist, but get an economist on it and figure out what's the best way to get the most effect with the least amount of cost. Like, what's the best way we can maximize profits and also maximize a reduction in carbon emissions.
Yep. And the last thing in their list was eliminating fossil fuel tax subsidies, which currently is estimated at about was estimated at $1.6 billion per year 5 years ago. They have decreased over time because the fossil fuel industry in Canada has declined over the last 5 years.
Why do they have subsidies? Wait, what? Back this train up.
Yes. You didn't know that?
No.
Yeah, they get subsidies. Why they get subsidies is beyond me, because they make the oil and gas companies will tell you that they're struggling. The language that's been out there for probably the last 10 years, now maybe less, but I'm going to say 10 years. I think it's probably been about 10 years since I heard it, was that in order for the pulling bitumen out of the oil sands in Alberta, in order for that to be profitable, the price of oil has to be $60 a barrel. The price of oil hasn't been $60 a barrel now since before 2015, but they're still pulling oil out of the ground. And there's obviously an economy issue out in Alberta, and there's a jobs issue out in Alberta, and probably I think Saskatchewan as well. But these companies are still pulling oil out of the ground. They're still pulling natural gas out of the ground, but the prices are lower than they were, say, in early 2008 when the price of a barrel of oil was $140, when apparently it was super profitable. If they're not making money, they're not pulling the oil out of the ground. It's as simple as that. I'm sure they want to tell people that the price of oil has to be $60, or at least it had to be $60, let's say back in 2009, which obviously would mean then, let's say if you add inflation, maybe that number is supposed to be $80 now. But there's still activity going on out there. Is it less than it was at the height of oil prices? Sure. But they're still pulling oil out of the ground, which means it's still profitable. Maybe it's profitable because they're receiving these subsidies. Maybe it's not. But I'm sure the subsidies will help their profitability. And they're obviously not using these subsidies to keep staff employed, to keep contractors employed. So what are they doing with it?
Yeah, I'm rolling my eyes at this one. Like, if you're trying to help the environment, giving companies... So whenever you're trying to do subsidies, as a general rule, you're trying to help out companies that are struggling for whatever reason. Listen, if you have a business model that doesn't figure out that oil prices go up and down and things like that, you have a bad business model. And I get that, but if this company goes out of business tomorrow, okay. Like, I feel bad for all of Alberta, right?
And that's what the free market is about. The free market is about, you know what? Businesses fail, but businesses are successful. And that's just the way the market works. If a business has to fail then it has to fail. It just means that it wasn't a good business. Why are we propping them up with subsidies?
Yeah, and it's not like this an essential. Like it's not like where it's an essential commodity where we can't get it somewhere else. If we couldn't get it somewhere else, I get it. I 100% get it. So in a local town, let's say the people that are doing the buses need to be subsidized because otherwise they'll just go under and they won't make any money. That's fair. I get that. I totally get that. I know they're climate producers as being a bus. They are, but they don't have an alternative. Like, you mean either have bus lines or you don't. And if you don't have bus lines, well, that's the problem. But a company that is just producing, like at its core, is producing climate change problems, I don't want to subsidize you. Like, I don't know problem. Like, I have no problems with them existing. That's not a problem. Whatever. Like, you
But
exist.
if they can't exist without the subsidies, then they shouldn't
Bye
exist.
bye.
Yeah,
You're not getting to waste my money.
Yeah. If a company like Suncor is failing, I don't care. Somebody's going to come in and buy their oil fields, buy their pipelines, buy this, buy that, and someone else is going to carry it on.
If we're trying to lessen our carbon footprint, using our tax dollars to subsidize an energy company that is going to increase our carbon footprint, that doesn't make sense.
And this is where some criticism of the Liberals' climate change plan has come into place, is that, you know, they introduced the carbon tax, but they haven't said anything about getting rid of subsidies.
Yeah.
So, and really they haven't said much outside of the carbon tax. And also the carbon tax is expected to have a cap, even though it's recommended that it needs to go higher than what that cap is. But that's for another day, and that's for whether the carbon tax survives after the election in October. I think it probably will, but who knows? Anyways, like I was saying, you can find this platform for tax fairness on taxfairness.ca. It's Canadians for Tax Fairness. Have a look. Listen to our opinions. Tell us that we're stupid. Tell us that we're on the ball. Whatever. Anyways, this has been Poutine Politics. My name's Adam.
My name's Mike.
Thanks for listening. Have a good day.
'Cause I'm the tax man. Yeah, I'm the tax man.
Hey everyone, thanks for listening to Poutine Politics. Be sure to keep up with us online and through social media. Our website is poutinepolitics.ca. You can find us on Facebook at Poutine Politics. You can find us on Instagram at Poutine Politics. You can find us on Twitter at Politics Poutine, because Twitter thought we were French. We're on YouTube, and we've also started a Patreon page at Patreon, patreon.com/PoutinePolitics. We hope we've entertained you enough that you can show us some love. We'll be back next week with another episode.